So I've actually been asked by an old student of mine to do a video on this. So over the past couple of months, probably 2 to 3 months, there has been a massive blow up in everything to do with Bitcoin, cryptocurrencies. The news has been going crazy on it, and a whole lot of information has really hit the forefront, which has driven a huge amount of people to ask me the question of, is it a good investment? Is it this? Is it that? There are so many different questions that I've been asked that it's almost gotten me pushed to the point where I just thought I'd rather do a video. So just to give you an insight of what this video is going to be about, it's going to be talking exactly about the good sides and the bad sides to Bitcoin and exactly what you should be watching out for. And the main reason why I'm actually saying it is a very bad investment, and it is probably quite a dangerous investment on top of that as well. So just to give you a bit of an insight of what I do, my name's Morgan, I'm a professional trader and investor, and I run a company called MS Equities Trading. I also run the Alpha Capital Fund, the MS Techs Group, and the Incubate Fund. And what we focus on is trading and investing in the financial markets and looking for great ideas to make a huge amount of money on. But on top of that, what we're focusing on is making sure that we always keep our clients safe, we always keep our customers safe. And in the process, in the MS Equities Trading Academy, we can teach our students how to do this as well. But foremost, what we teach people to do is to be a healthy investor and a healthy trader. On top of all, I don't really care if you're focusing on making money. I'm caring on making sure you're doing it right and you're doing it the right way. And what we're going to lead into this video talking about is, like I said to you, the good and the bad. And like I said, I do think it is a bad investment to go into, but I'd like to say very, very clearly, I am actually a huge supporter of Bitcoin. I'm a very big supporter of cryptocurrencies. And on top of that, I am a massive supporter of blockchain technologies as well. So the thing is that although I have a negative view of it, I'm actually almost torn to give you this negative view. But the problem is, we don't invest based on our emotion and our feelings. We invest based on the data, and we invest based on the risk. And the problem is, something like cryptocurrencies and Bitcoin is an incredibly risky investment to put your money in. And what we're trying to do is, by giving you this video, giving you this information, I don't want to give you a biased view. I don't want you to try and change your mind. What I really want you to do is go away from this video with lots and lots of questions. I want you to go and research the information. So while I'm going through this video, I'm going to be popping up websites that I've visited, articles, and proper financial data that I've made use of to be able to understand a lot more about Bitcoin, what it is, and especially what are the risk areas. So what we're going to do is just basically start off with giving you the bad sides to Bitcoin. And these are the bad sides, not just to Bitcoin, but cryptocurrencies as well, that I feel are the core reasons why I'm calling it a bad investment. Now, I really want you to take the time to also research these things as well, because some of these aspects are going to be things that, firstly, you're not going to understand maybe too much, or you might have a contrarian view to it. But what I really want you to do is be able to make use of the articles and all the links that I'm going to list down below to research these things a little bit more and try and understand a lot more about what cryptocurrencies are. Because the thing is that if you are really looking at this as an investment opportunity, you need to understand these aspects much, much better. So a massive part of Bitcoin is a cryptocurrency. Bitcoin is not any sort of physical currency. It's not something that you can put in your wallet and you can hold. Yes, pun intended, you do get Bitcoin wallets, but these Bitcoin wallets, unfortunately, are hackable, and I will explain that a bit later. But the first point is there is no insurance to your Bitcoin holdings. Now, some people will say, well, there is no insurance to your own money. So let's say you have US dollars or you have euros or pounds. The thing is that there is insurance. So the insurance based around what you currently have in currency is, for one, you will probably be owning it in a bank. So it's probably in a bank account, a savings account, an investment account. Now, all of these banks hold a very high level of either insurance or integrity. So one of the two things, knowing that your bank is probably not going to shut down immediately and never give your money back to you. Secondly, if you're holding that currency in cold hard cash, so something that you can keep, you are basically that insurance. You're the person that is going to keep that money safe. So technically speaking, you have insured it. Now, the problem about Bitcoin is there is no insurance behind it. There's no insurance behind physically owning the asset. There's no insurance behind being able to track the asset exactly where it is, how it is being used, and where it went if it's been taken. And those are the massive problems behind it. So having an asset that you're investing in that has no insurance is one massive risk area. And in terms of investments, these are usually the risk areas that people do not approach, because without having an insurance behind it, it is very, very difficult to be able to know if you can get out of that investment if something goes wrong. Now, the second point to it is going to be talking about hacking. Now, I am not some tech geek. I don't know too much about hacking, but what I do understand very well about Bitcoin and cryptocurrencies is it can be hacked. Now, I'm not going to explain to you too much about Bitcoin and about cryptocurrencies because it is going to take me another 10-20 minutes. I'm probably not going to do it too well. So I know that if you're on this video, you probably know quite a bit about Bitcoin. But basically your Bitcoins, if you have a physical Bitcoin, so if you actually own Bitcoin or cryptocurrencies, it should be held in a wallet. Now, this wallet is basically what you would tend to be called a cloud storage system. So it's basically not a centralized system, and it can be stored on your own device. So basically there's no centralized server around cryptocurrencies. There's no centralized server around blockchain technology. And that is something that we'll address later in the video. But basically, let's say, for example, someone hacks directly into your wallet. Let's say you've got your wallet access on your cell phone, and someone installs hackable technology inside your cell phone through a loophole. They can steal your Bitcoins, and your Bitcoins are gone. You can't run to an insurer, you can't run to your bank, you can't run to anyone, because you're the only person responsible for those Bitcoins. If those Bitcoins get taken from your computer or your phone, they're gone. And that's the biggest problem, is Bitcoin is becoming incredibly easy to steal. And the biggest problem is the fact that Bitcoin is becoming so valuable around the world right now. The hackers are becoming better and better and better. And now that everyday people own Bitcoin, these people don't understand the security measures that they need to have in order to own or invest in physical Bitcoin. Now, the reason why I'm saying physical, I'm not talking about physical. There's two ways to invest in Bitcoin. Number one would be to actually invest in a Bitcoin derivative. So you're not owning the underlying asset, but you're owning, let's say, for example, you purchased a financial instrument. So let's say you go to a broker that is able to offer financial derivatives in Bitcoin. You would be able to purchase a financial derivative, which would give you the underlying security contract that you have signed with that broker. Now, what I'm talking about in terms of owning the physical Bitcoin is actually having the single Bitcoin currency inside your online wallet. So you're not owning it physically, but it's different to owning a derivative, which means you don't own the underlying physical asset. So that is a big problem to hacking into a physical Bitcoin wallet, is it is relatively easy for these professionals to do it. And because so many people have Bitcoin now, it is becoming a lot easier to attack the people who don't understand it incredibly well. Another big problem about Bitcoin and cryptocurrencies is Bitcoin has paved the way for a massive movement in cryptocurrencies and in blockchain technology. I do think that Bitcoin has done an incredible job in order to create almost an amazing culture and innovation and a very, very disruptive technology that has not only been able to create amazing things, but it also has been able to create a lot of volatility and a lot of change in the markets. A big problem about creating this change is some of the change can be very bad. And one of the massive bad changes that has happened is people are coming out with fake cryptocurrencies around the world. And on top of it, they're also coming out with scams. Now, the biggest problem about this is people fall for scams. And the biggest problem about Bitcoin is with there being very little backing behind it, very little authority regulations, which we'll talk about. It is incredibly easy to scam people out of their money. Now, the Bitcoin scams around the world, maybe you don't know too much about them, but billions and billions of dollars are being stolen from everyday people like you and I every single day in this industry because of fake cryptocurrencies and Bitcoin scams. So it's not Bitcoin themselves, but it's people posing to be either people who can sell you Bitcoins or people who can process a deal in investing in Bitcoin or in being able to connect you with sellers that can sell you Bitcoin at either a better price, a more competitive rate, whatever they might try and use as a selling point. These are all scams and they're profiteering from a massive growing industry. And an industry being very new, people know very little about it. But think of it this way. If you knew that back in sort of the early tech boom days that Apple was what it was going to be today, regardless of whether you knew the company was going to fail or not, you would have invested in the company knowing, well, sure, Apple might be a very, very good thing because I've sort of got an idea that in the future this is what it's going to be. And that's what people see Bitcoin to be. People see Bitcoin to be a massive disruptive technology that without a doubt is going to become a massively successful proponent to the industry. And the problem is about these scams is they are using this emotional tie to Bitcoin growth as an aspect that they can take advantage of. And the problem is because people believe in Bitcoin without even knowing what it truly is, they are falling for these scams, and it's making life a lot easier for scam artists and thieves and criminals out there to scam money from people. And that is a massive, massive problem about Bitcoin technology. Something that is very worrying from an investor perspective about Bitcoin and cryptocurrency technologies is there is little to almost no fundamentals behind it. Not only because it's a very young currency and there's very little financial historical data behind it, the biggest problem about it as well is there's very little fundamental news about it. So there's very little financial data that's being released on a consistent basis that is actually fundamentally based. There's very, very little behind the authorities, the regulations. There's basically no authority and regulation behind it. If I can say from my personal opinion, people might argue and say there are certain regulations around the world. As an example, a lot of the financial regulations are trying to build regulations around Bitcoin and the practice of buying and selling Bitcoin. But the problem is this is their duty. This is their duty as financial regulators to try and build some level of structure around what it is. But Bitcoin itself is not erecting or establishing any level of regulation, centralization, or tracking methods. And this is because of what it is. It's blockchain technology. And if anyone understands blockchain technology very well, you know exactly what I mean. But please make sure to take some time to research and understand a lot more about blockchain technology, which I'm going to explain a little bit more just towards the end of this video. Now, something that's very worrying to me is what people do understand about cryptocurrencies and Bitcoin is it was built by a person named Satoshi Nakamoto. Now, I think it was back in 2010 around about, there was an article posted about cryptography and how it would be able to turn into a cryptocurrency. And by creating a very special infrastructure, he would be able to build something called Bitcoin. Now, from what people understand, he is the person that founded Bitcoin, but no one actually knows. He is not in the public eye. He has actually not been heard from for a very long period of time. And there is actually no information that people can find around the world about who truly founded Bitcoin, who is currently running it, and where it actually comes from. Now, take this as a very dangerous piece of information. You are trying to invest in something that no one truly knows who built it. No one really knows. And for all you know, it could have been built by another central bank around the world. It could have been built by someone who actually had a very, very bad intention of what to use cryptocurrencies for. And now I'm not speculating at all. I'm using what people know. What we know is that we don't know who really built it. And that is very, very dangerous because as an investor, you really want to invest in things that you know are real. As an example, people like investing in Apple because they own an Apple iPhone. People like investing in BMW or Audi because they own that car. People like investing in things that they know, things that they can use and things that they can believe in. something like Bitcoin, where no one really knows where it comes from, where it was built, or who built it, can sometimes be worrying to investors with more of a holistic and a belief-based approach into their investments. Another big problem, which I am going to mark as good and bad, but starting off with the bad part, is this is a massive threat to central banking systems. It's a massive threat to regulation, and it's a massive threat to a lot of companies around the world, like banks. And this is very, very bad in a certain way. Now, I am going to say it's also very good just now, but in the bad aspect of it is what people do understand about the central banks is they're a very dangerous system. The central bank doesn't necessarily have anyone that can beat them. And a lot of people thought that a cryptocurrency would be the first step in beating the banks. The problem is no one really wins on the first blow to a central banking system. Now that is the biggest problem about the cryptocurrencies and Bitcoin itself. There is no regulation behind it, more specifically because of what blockchain technology is. There is no centralization because blockchain technology is based on not being centralized. It's based on using a multitude of networks around the world to be able to push and move information on a continuous basis. Doing this would break the physical foundations of what cryptocurrencies actually are. And that is a big problem because central banks base their entire mechanism of centralizing the system and having control over it. So all of the world currencies around the world are controlled. These currencies are moved by multiple different aspects, whether you talk about quantitative tightening, quantitative easing, inflation, interest rates, all of these aspects are physically controlled. And these things are controlled by a group of very, very intelligent people that are spread around the world. Now, these are things that cryptocurrencies are threatening. And the problem is going up against someone or an entity when you are brand new and you're just starting out is going to be a very dangerous step for them. And there is already things leaking through the cracks, which I'll talk to you about now. Now, something very bad is that blockchain technology, like I think every technology around the world, can not only be used for good, but it can also be used for bad. And the problem about cryptocurrencies is this allows people to transact. And the problem about cryptocurrencies is this allows people to transact across the planet at any point in time without any level of centralization, any form of tracking, and any form of regulation. And a massive issue is a lot of criminal entities and companies around the world who are doing less than, let's call it, good things with their cryptocurrencies and their transactions. They are able to operate freely, and that is a big problem because the way cryptocurrencies are physically built is that you can actually transact from anywhere in the world with anyone in the world, and you don't get anyone that is watching you. And just think of it this way. Anyone on the planet would be able to use cryptocurrencies at any point in time, regardless of who they are. The central banking system works very, very closely with criminal units around the world, terrorist units around the world who are trying to crack down on problems around the world, terrorism, criminality, and massive world issues that are being caused by the movement of money around the world by entities that shouldn't be moving it. Cryptocurrencies takes this problem away for them, and it makes it a lot easier for these entities, these bad people, to be able to move money and transact on a consistent basis. And what has happened is this has been seen by central banks around the world. The first banking system to make a massive hit against cryptocurrencies and Bitcoin itself was the Chinese central banking system. Now, the Bank of China basically came out right on the beginning of September, right on a Monday, and said, we are not happy, we are banning ICOs. And what this basically was, if you know what an IPO is, this was an initial coin offering to investors who wanted to invest in companies. They were offering up Bitcoin and cryptocurrencies to these investors who wanted to purchase holdings in their companies. Now, this was a massive problem because not only is China one of the biggest Bitcoin miners around the world and part of a massive founding block for cryptocurrencies and Bitcoin, now they've even moved to put more bans on cryptocurrencies and investigate the damage that cryptocurrencies has put on world trade, on business, as well as central banking systems. Now, what I think they're probably going to land up finding is cryptocurrencies has put a massive damage and a massive dampening on banking systems and world trade businesses around the world. And now you have to ask yourself this question: what exactly do you think they're going to start doing? Are they going to start thinking good of it or thinking bad of it? These are big problems that they're going to experience. Mario Draghi actually mentioned in, I think it was the end of August, in one of his ECB press conferences, that he actually doesn't understand why European countries would even want to go for something like a cryptocurrency, and really put his foot down firmly against a reporter asking the questions, saying that no European country would ever be able to use cryptocurrencies as their own base currency because it's not allowed in the Eurozone. Now that can be a big problem because Mario Draghi is who people consider to be a frighteningly powerful person of the European banking system and a very powerful person around the world. His influence spreads miles, and that is a big problem because between people like Janet Yellen from the Fed, Mario Draghi from the ECB, and other people around the world, as soon as everyone starts to speak the same language and talk badly against cryptocurrencies, you're going to see a lot of regulations moving against them, a lot of policies clamping down on cryptocurrencies and Bitcoin itself. Now, enough for the bad, because I'm actually not one to try and talk about things badly. I really like to look at the good in things. And in cryptocurrencies, blockchain, and Bitcoin, I think there are a lot of good. And I'm really, really supportive of this cryptocurrency, of this technology itself. Now, cryptocurrencies and Bitcoin itself is built from blockchain technology. I'm not going to take too much time to explain blockchain technology to you, but what I can say is blockchain technology could easily change the face of this planet, could easily change what we do for the next 50 years to even up to the next 150 years. And I'm not talking about small changes, I'm talking about massive changes that could change the world. Anything from driverless cars to decentralized banking systems, to creating better insurance products all around the world, to be able to share data a lot faster and a lot easier around the world, to create more secure systems, security systems, and identity systems around the world. These are things that the world needs. These are things that we all need, and cryptocurrencies is going to be a massive step in that direction. Now, these technologies are all very new, and what I do think is they're going to grow incredibly fast. They have gone through some problems, some forming stages, and they have been able to create a massive impact on the world. And I think that we are only in the beginning phases of what this technology has done and what this technology is going to be doing in the next 20 to 50 years of our life. Another point about cryptocurrencies, and I'm not going to try and bash on the central banking system at all, but historically speaking, the central banking system and massive banking systems around the world have caused major damage in certain economies. I really don't have to explain it too much, but anything from the financial crisis of 2009 to the real estate industry collapsing, insurance industries always causing massive issues in the economy, to banking systems being too big to fail, meaning that when they did fail, the people of the countries would have to bail them out by paying higher taxes, paying higher levies on everything, and the government just bailing out these massive banking systems. Now, these things have happened because of centralized banking systems. The problem about centralized banking systems is it can be controlled. And by controlling something, the bad can influence the good. And the problem about centralized banking is, like they say, evil prevails when good men do nothing. That has happened very, very frequently. And I'm not going to be able to spend too much time talking about examples, but what I will do is take some time to throw up some examples talking about massive problems that centralized banking systems have caused around the world that have really created a distrust and a distaste in centralized banking. And on top of that, the retail banking industry is ripping off its investors. People around the world putting their 2 cents, their money, their savings in retail banking systems, and these retail banking systems ripping them off with high interest rates, really confusing contracts that no one really understands, and massive penalties on people who default on their payments or don't necessarily understand exactly what the banking system is trying to offer them. This is where problems occur. This is where people get lost in the system and where massive issues are beginning to show. To create a cost-free or a low-cost banking system for the world would be able to make investors, and more specifically everyday people, operate a lot easier, to reduce the cost that is not necessarily needed, and to make it a lot easier for people to transact around the world, is why cryptocurrencies is an incredibly good opportunity. Now, another point is it's a free marketplace, and Bitcoin makes it much more competitive. As you know, Bitcoin has caused massive waves in the industry, and this has pushed banking systems to come up with much more disruptive technologies and better ways to be able to transact and appeal to their clients. Now, cryptocurrencies and blockchain technology have paved the way for disruptive technologies as well. From the time that they were founded all the way up until now, the industry is growing fast, and it's growing very fast. And very soon you're going to see blockchain technologies that are going to come out and are going to revolutionize the industry. These are making industries, not just in banking, but every other industry, much more competitive. People are now racing to try and find the technology that can win the race and the technology that can dominate. And blockchain technology has made it a lot easier for companies to be able to get a step ahead and to beat their competition. Now, I think this is very important that we create a free marketplace, a more competitive marketplace, because even though you are going to have losers that are going to basically lose a lot in the process, you're going to have winners who are going to gain a lot. And by doing so, this makes it a lot easier and a lot more competitive for the underdog to win than for the overdog to just sit there and sort of take control. And the problem about taking control is no one likes it, because people abuse their power when they take control. And by using blockchain technologies, cryptocurrencies, it makes it more competitive in multiple different industries for people to actually get ahead. Now, like I said to you in the beginning, cryptocurrencies are uninsured and they are hackable. On top of that, there is very little fundamental information behind it, and the regulation and the central banking system. The very important part about this is Bitcoin and cryptocurrencies are very young. They're only a few years old. And what this means is over the next couple of years, you're going to see incredible technologies coming out. Already, these years have shown amazing technologies coming out, amazing systems that can make Bitcoin and cryptocurrencies a lot easier to use. And I do think over the next 20 to 50 years, we're going to see a lot of amazing technologies coming out. We're going to see a lot of new things that we can make use of that is going to make life a lot easier when using a cryptocurrency or using Bitcoin. And the last point, the most important point, it is blockchain. Now, please take the time to research blockchain to understand it a bit better. But I cannot urge to you how important it is for people to understand blockchain. Blockchain has been like the invention of the wheel, the splitting of the atom. It's literally been, to myself personally, on that level of invention. It has been amazing to see what blockchain can do for our world and how blockchain can make life incredibly easy for us to operate and for us to grow and prosper and make life a lot easier for every single industry out there. It is very important that we actually educate ourselves about blockchain and about the possibilities of where we can go with it. Now, something I have to conclude this video with is why do I actually feel it is a bad investment? Now, for myself, the bad outweighs the good. The good parts are that Bitcoin is growing fast, it's never going to leave, and we need it. It needs to stay, and it needs to be part of our lives. But in terms of an investment, it is not a good investment. With little regulation, little fundamentals, the fact that there is little insurance and it is easy to hack makes it very, very difficult for us to understand why it would be a good investment. Now, there are many big investments around there in the world, but September proved to us why Bitcoin could be such a bad investment. Like I said to you, on that Monday, the beginning of September, China came out saying that they're going to ban ICOs and they're going to launch some very big investigations. Further to that, the price fell. The price fell from nearly, I think it was about $4,900 a Bitcoin, and it fell fast. It fell to, I think it was about $2,900 at the bottom of it, and it continued to fall. And that was very, very dangerous to see, because throughout the month of September, the Chinese bank has continued to release financial data and information regarding the fact that they're going to continue to crack down on Bitcoin and cryptocurrencies and make it a lot more difficult for companies to operate who use Bitcoin. Now, this is dangerous because the Bank of China is a founding centralized system. Many banks around the world use the exact same system that they do, and they work very closely towards what China tends to land up doing. Yes, this is a speculative comment, but what I'm saying is, from what I've seen, when Bank of China does something, the European Central Bank tends to follow along, followed by the Bank of England, followed by the Bank of the United States. And what I can tell you right now is, over the next 12 months, I can assure you one of those banks is going to follow on and enforce the same regulation and the same bans that the Bank of China had. Now, this is a big problem because over the month of September, the price of Bitcoin dropped over 40%. And the saddest part about it is not the fact that the price dropped by over 40%, because I was not invested in, but it was what I heard had come from people who were investing in Bitcoin. People had bought in at the $4,000 region, the $4,500 region, because people were posting videos, articles, and information out there saying Bitcoin is on the rise, Bitcoin is going well, and people went and bought Bitcoin. They not only bought physical Bitcoin, they also did things like actually buy Bitcoin on margin. So they were buying it on credit, or they were trading a CFD, or they were basically putting themselves out there, buying a Bitcoin with money they didn't have. Then throughout September, the price of Bitcoin fell through the floor. Bitcoin dropping by over 40% is one of the biggest drops it's ever had. Now, the biggest problem about this is Bitcoin's dropped by 40%. And some of these people are still holding onto their investments, wondering where it's going to go. Some of these people have wiped out their entire accounts because of trading on margin, so they've lost thousands of dollars, and other people have no idea where to turn. Some people are adding to their investments, some people are jumping out of their investments, and some people are just waiting for something to happen. The problem is we don't know. No one has any idea what Bitcoin is doing right now. We have no idea which central bank is going to attack Bitcoin next. And we have no idea where the price is going to move to, because there are little fundamentals behind it. Sure, we can use technicals, but technicals only do so much. There is very little justification behind investing your money in something that is such a limited investment. And that is a big reason why I have a love-hate relationship with Bitcoin. I absolutely love the fact that there is Bitcoin, cryptocurrencies, and blockchain technologies out there, but I don't love the fact that it's such a dangerous investment, because there is so little fundamentals behind it, and there's so little information that you can use to actually justify if it's a good investment or not, that I can't invest my money in it. I can't invest my clients' money in it. And I know a lot of professional traders and professional investors that feel the exact same way. For some of us, it actually even hurts to see something so beautiful like Bitcoin, cryptocurrencies, and blockchain technologies get beaten up out there in the industry, because it is needed. But the problem is, it's not the time. It's not the right time for cryptocurrencies to take on central banking systems. They need to understand exactly who they're going against. And I know they do. I'm really not trying to justify myself against them. But what I'm saying to you is, as an investor, as someone who's trying to make money, Bitcoin is not the answer. Bitcoin would never be the answer until such time as they can get rid of the bad points we mentioned. Until such time as they can strengthen themselves, find a way to create regulation, create stability around their structure, and be able to come up with a system of fundamental news and fundamental economic releases that we can actually use to understand where Bitcoin might be going in the future, just a little bit more than watching a chart move up and down in price. Now, something I want to leave you with is going to be, probably to some of you, very interesting. Some of you, you're probably not going to understand this, and some of you, you're probably going to want to try and start a massive argument with me right about now. The markets are scale invariant. And what I mean by this, to make it simple, regardless of what you're investing in, whether you're investing in currencies, whether you're investing in bonds, whether you're investing in equities, small caps, large caps, commodities, the price of that asset moves. The price of that asset moves either up or down over a certain period of time. Some of them move slow and some of them move fast. Some of them move with volatility and some of them move with stability. But the fact of the matter is everything in the market moves, and you have to make sure you're putting the money on the right side of it. Let's say you're buying an asset and you're hoping the value goes up. Regardless of what an asset is, if the value goes up, you're going to make money. If you're short selling an asset and you're borrowing it to someone and the price of it goes down, you make money because you're going to buy it back at a cheaper price. And that is something that you need to understand. The market's a scale invariant. And regardless of where you put your money, what you invested in, and how you invested, the point is to find something that is moving in value, which is basically the entire financial market, and something that is very secure and a low risk investment. Now, I'm not saying go invest in bonds over the long term. I'm not saying go invest in something over the long term. What I'm saying to you, question what I've just said to you. Question everything in this video. Question the fact that the markets are scale invariant. Question the fact that Bitcoin is a bad investment, and go out there and invest. Invest in yourself and invest in your education, and find a way to understand more about the financial markets and understand more about what you should invest in and why you should invest in it. Because the problem is that people understand the financial markets the wrong way around. The markets are scale invariant, and there's no point in trying to believe in Bitcoin, root for Bitcoin, cheer for Bitcoin, if it's just something that's an asset that's moving up in value. Whether it's the tulip bubble, the tech bubble, the housing bubble, any other bubble that you speak about in the financial markets, where the price of an asset was driven right through the roof because everyone was talking about it, the value of that asset became overvalued, the bubble popped, and the asset reduced to almost zero value, or almost the lowest value that it previously rose from. The markets are scale invariant, and Bitcoin could easily become one of those bubbles. Now, I'm not judging Bitcoin, I'm not judging anyone that is investing in it, and I'm not judging anyone that isn't investing in it. But what I want you to do is take the time to question everything we just talked about, and take the time to research it and understand a bit more about why I'm saying the markets are scale invariant and why there are much better investments out there in the market. So I just wanted to say to you, thank you so much for watching this video. I know the video dragged on a little bit, but it is a lot of information to get through. For any of you who want to find out more about what we do, you can make sure to actually have a look below. We're going to have links to our websites as well. You can have a look at what we do. We teach people how to trade, invest, and manage their wealth in the financial market. If you are interested in finding out more about what we do, have a look at our website. Make sure to contact us. My team will make sure to get back to you immediately. Once again, everyone, thank you so much for tuning into this video. Hope you have a great week of trading and studying. See you in the next video.